Alright guys, so this is your financial Armageddon update and let's talk about the global economy today. Everything is on a knife's edge. We have shocks from both the US and China that threatens to unravel everything. And if you are in the markets, it's really time to sit up. This is where the rubber meets the road. There's going to be a ton of danger leading to the elections. But let's cover the China bombshell first because everyone is starting to lose their minds. Yes, Beijing announced a multi-trillion yuan stimulus and we saw gains of over 30% in just 10 days in the market. However, now the Chinese stock market is starting to stabilize. After a big pop of 10% during the opening, the sell-off began. We are down by over 5% today and Western investors around the world, they are calling it the Armageddon, the end of China, the economic apocalypse. But what I call this is a reality check sell-off. The easy money has been made, we said it many times. China disappointed Western investors who believed that Beijing would print money to pump stocks higher. There's a big fundamental misunderstanding of how the Chinese economy works. This isn't Wall Street. The Chinese government's main priority is the health of the economy and not the markets. The cause of the panic is quite hilarious. Chinese planners came out and vowed to hit their GDP target of 5%. The plan was robust, and it is still monetary easing, allowing local governments to access more money and to throw in an additional 100 billion yuan for industrial investments. But what the market really wanted was another bazooka stimulus package, basically for President Xi to fire another big multi-trillion RMB stimulus package. It didn't happen and Western hedge funds, they're all losing their minds. Wall Street was waiting for this at least 3 trillion yuan worth of fiscal support, and that's equivalent to $400 billion. It's almost on par with the '08 bailout money the US dropped after the housing crash. The issue here is that China doesn't want to follow the US into an economic trap. Excessive debt is very unhealthy. Just look at Japan, their debt to GDP is almost 250%, and that leaves them with almost zero room to maneuver. China obviously doesn't want to be boxed in, which means they can't just fire the stimulus bazooka whenever they like. That might indeed support equity prices, but it will dig China into a bigger debt hole. Let's put this into context. China plans to keep the deficit spending at 3% of GDP or below. In comparison, US deficit spending is over 6%. Unleashing over 3 trillion yuan will push China over the limit very easily. Beijing is not going to break the debt market just to push stock prices higher. And unless you see a total implosion of the Chinese economy or real estate, further stimulus probably won't be coming. And once again, the stock market is the lowest priority of the Chinese government. It's important we realize that China can always borrow the money they need. Bond yields are half that of the US. It's just a question of timing. Does Beijing fire the bazooka again? Do they fire now or do they play defense? According to Goldman, China is saving their fiscal power in case of a Trump victory, and I agree 100% with this assessment. Trump is the king of tariffs, and if he wins, the entire Chinese economy will be at risk. And let's not forget Trump's definition of a tariff. It tells us that disaster is coming in 2025.
We're going to be a tariff nation. It's not going to be a cost to you. It's going to be a cost to another country. I heard Kamala the other day, Comrade Kamala, she said, oh, if you do that, he's raising your taxes. No, no, no. I'm not raising your taxes. I'm raising China and all of these countries in Asia and all over the world, including the European Union, by the way, which is one of the most egregious.
If he sticks to his words, China might be slapped with a 60% tariff across the board, and this will be disastrous for both the US and China. In 2018, Trump imposed his first set of tariffs on Chinese imports. It was targeted at specific sectors, and that alone caused China's exports to drop by over $10 billion a month. China's monthly trade with the US is around $45 billion, or half a trillion annually. A 60% tariff could make all of China's exports uncompetitive in an instant. And this is why we are seeing Beijing build trade relations around the world. It's why they are trying to expand BRICS and signing agreements with Latin America. The trade war between the US and China right now is still quite manageable. China can get out of this quagmire given enough time, but a sudden 60% tariff tomorrow will be a shock to the system. UBS forecasts an economic nightmare for China. If Trump goes through with this, China's annual growth rate could drop by half, and that means a GDP growth at around 2%, which is unthinkable for the Chinese government. China can't afford to let their economy tank, so they will have to unleash trillions of yuan to boost domestic consumption. Local spending will have no choice but to make up for the slack. And if you look at things through this lens, you probably understand that Beijing is reserving their firepower for 2025. If Kamala wins, then hooray, it's business as usual. But if Trump wins, then the stimulus tsunami will come. We shouldn't expect any additional stimulus from China until after the elections. Now, if it comes earlier, then that's great news if you're in the markets. And this means the Chinese stock market, if no stimulus comes, will probably be in limbo, bouncing around the current levels until something happens. But let's talk about the US economy now because bond yields are starting to reverse. And by reverse, we mean it's going up. It's opposite of what the Federal Reserve wants. The 10-year is back well above 4%, which isn't good for the US economy. The market realizes that hey, the Fed isn't going to cut by 50 basis points, and let's dump our holdings of US bonds now. The problem we face is an economy whose private sector is collapsing. And to make the numbers look good, the US government, they are hiring workers like never before. It's crazy. In September, the US economy added a crazy amount of jobs, 250,000 more. However, it isn't private sector jobs that flew to the moon. It's government hiring that's exploding. Government workers soared by nearly 800,000 jobs in September. It's the biggest monthly surge since 2020. And if we remove that outlier since forever, which really begs the question, can we call this a robust economy? If the US government keeps hiring to juice up the numbers, sure, unemployment might never collapse, but inflation will still continue to stay elevated. You are increasing the demand for goods and services without adding to the supply. And that's why you have a private sector in the first place. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to investing in gold and silver, I trust Indigo Precious Metals in Singapore. They have made buying precious metals safe, fast, and easy for investors, whether you're making small purchases or large scale investments. With gold prices steadily rising, ensuring you buy authentic gold at competitive prices is crucial. And as inflation shows no sign of slowing down, precious metals continue to be a reliable store of value. Whether you're purchasing by the ounce, the kilo, or saving up by the gram, Indigo Precious Metals helps you maximize your investment no matter your budget. The best part, you can test your coins or bars on site, giving you complete peace of mind. As a leading retailer and bullion dealer in Singapore for gold, silver, and platinum, they are your go to source. If you're considering your first gold, silver, or platinum purchase, there's no better place to begin than Indigo Precious Metals. For this month only, you can get a 100-ounce silver bar at less than 3% premium. Stocks are limited. So if you're looking to buy silver, this is a great promotion to really consider. And with my code Sean Fu, enjoy a further discount on your first purchase. So start building your gold and silver stack today. And here's how ridiculous the comparison is between private and public payrolls. Private workers grew by only 130,000 jobs. Meanwhile, government payrolls flew up by nearly 800,000. That's a 6 times difference in the milder scenario. More likely, private payrolls actually collapsed. When you have bizarre data like this, it really distorts the entire economy here. The Federal Reserve, let's not forget, they take their cue from employment data. This indicator tells them the US economy seems strong and there's no need to cut rates aggressively. And because of this, bond yields on the long end, they're going to stay stubbornly high, which will clobber the real economy. We are seeing mortgage rates explode up by 30 basis points, going above 6.5%. And this is going to add more strain on consumer spending. The longer this continues, the more tapped out consumers will be, and this is how dangerous this false illusion really is. And there's another big tail risk we need to talk about. The longer the Fed keeps interest rates high, another market collapse could be underway. The risk is starting to build, and to understand this, we need to look towards Japan for a bit. The yen carry trade, the same trade that triggered the August collapse, is coming back. Japan's Prime Minister Ishiba suddenly flipped his position. He was supposed to be hawkish and support rate hikes to defend the yen, but he's back to being dovish, which means the BOJ now has political pressure not to hike rates. Remember what drove the yen carry trade in the first place? Near zero bond yields in Japan, plus higher yields in US Treasuries. And that is the recipe for the yen carry trade to even exist. Almost immediately after Ishiba's comments, the dollar flew up against the yen. We are now at 148 yen to the dollar. So there's a big weakening in Japan's currency once again. Doesn't that sound familiar, guys? The carry trade risk is starting to rebuild, and we now have a setup for another magnificent crash. Recall the ingredients we need for an unwinding. US rates have to come down and Japanese rates have to go up. It reduces the interest rate differential and strengthens the yen once again, and that makes the carry trade less profitable and could trigger another massive sell-off. It's important we realize the pressure that's building in the system again. Japanese investors, they are piling up tons of US Treasury bonds. In just August alone, net purchases hit 6 trillion yen, and that's $38 billion of new positions added. Total purchases were nearly 13 trillion yen. Remember that August was the big sell-off. In September and October, we can expect Japanese investors to buy even more US bonds. It's not just retail investors but the banks and pension funds as well. We are seeing another re-inflation of the yen carry trade bubble, and eventually it will have to unwind someday. There's only so much Japan's currency can fall before the BOJ, they are forced to defend the yen. And that's just the risk on Japan's side. For the US, the big threat is geopolitical risk, more specifically higher oil prices from the Middle East. The price of crude has been rising non-stop since the start of the month. We have gone from $72 to well above 80, and that is a 10% increase even though the global economy is slowing down. Inflation is the biggest risk any politician faces. If unemployment rises by 1%, you have 1% more of the population pissed off at you. But if inflation rises by just 1%, you now have the entire country scared and angry. And this forces the Federal Reserve to cut less or even stop the cuts if CPI rebounds, adding even more fuel to the yen carry trade. And here's how urgent things are in the Middle East. Israel's defense chief was supposed to hit Washington for talks, most likely for Biden to talk him down. But what do you know? Netanyahu blocked the visit. So we are back to square one and we are stuck on this escalation doom loop. The war has spread into Lebanon now and troop movements there they are expanding. Oil at $100 isn't impossible. But if we get there, that's probably it for the global economy and the markets as well. Prices will go through the roof and consumption will collapse again. There's really nowhere to hide now. From here until 2025, there's extreme risk. Even after the elections, there's going to be a massive chance of a global trade war. So hang on tight, guys. The black swans, they've multiplied and they're circling around like never before. But let me know what you think. Will China unleash the stimulus tsunami this year? And will we have another yen carry trade collapse? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.